50,000 Bitcoin banks. The average transaction size is going to go to 2,000, then 20,000, then 200,000, then 2 million, then 20 million. Maybe at some point you'll see the smallest transactions are million fiat terms. There'll be an explosion in layer 2 options. There'll be an explosion in layer 3 options. One day you'll get to the point where, if everybody with an iPhone can buy, sell, and send Bitcoin instantly on the iPhone.
Hey there, Bitcoin enthusiasts. Welcome back to Investing Alert News, your go-to channel for everything crypto, bringing you news you can profit from. Today, we're diving into the latest Bitcoin forecast and breaking down what you can expect this week. So, let's get into it. This is the current market snapshot. As of June 24th, 2024, Bitcoin is trading at around $60,567. Recently, we've seen quite a dip, with strong selling pressure pushing prices down. The Fear and Greed Index is sitting at 30, indicating a state of fear in the market. This is significant because when fear is high, investors are generally more cautious and likely to sell. What's driving the market? Let's look into the Fear and Greed Index. The current score of 30 tells us that the market sentiment is quite fearful. Historically, this kind of sentiment can sometimes present buying opportunities, but it also means we need to tread carefully. The Fear and Greed Index is a tool that helps gauge the emotions and sentiments in the Bitcoin market. When the index is low, it signifies fear, which often leads to sell-offs. Conversely, when the index is high, it indicates greed, which can drive buying sprees. The index uses various data points, including volatility, market momentum, social media trends, surveys, and Bitcoin dominance. Understanding these components can help you make informed trading decisions. This is the hot topic currently, Mt. Gox repayments. There's a lot of buzz around the Mt. Gox repayments. If these repayments flood the market with Bitcoin, we could see further downward pressure on prices. This is a critical factor to watch. Mt. Gox was one of the largest Bitcoin exchanges until it was hacked in 2014, leading to a loss of 850,000 Bitcoins. The repayment process involves returning funds to creditors, which could release a significant amount of Bitcoin into the market. The impact of these repayments could be substantial. If a large number of creditors decide to sell their Bitcoin, it could create a surplus in the market, driving prices down. Monitoring the schedule and volume of these repayments will be crucial. Now let's discuss the institutional interest. On the flip side, we have some good news, with ongoing interest from institutional investors. Their involvement often brings stability to the market, which could help counterbalance some of the fear-driven selling. Institutional investors include hedge funds, investment banks, and large corporations. Their entry into the Bitcoin market signifies a level of confidence and legitimacy, often leading to price stability and growth. Recent developments, such as the approval of Bitcoin ETFs and increased adoption by financial institutions, have been positive for the market. These factors can provide a buffer against volatility and drive long-term growth. All right, the moment you've been waiting for, what to expect this week. Now let's talk about what might happen this week. Here is the bearish scenario. If the fear continues to dominate and Bitcoin from the Mt. Gox settlement starts entering the market, we might see Bitcoin testing lower support levels around $58,000. This is a realistic scenario if bearish sentiment persists. In a bearish scenario, technical analysis suggests looking at key support levels. Support levels are price points where a decline is likely to pause due to a concentration of buying interest. For Bitcoin, $58,000 is a critical support level to watch. Other indicators to monitor include the moving averages, volume trends, and potential news that could exacerbate or alleviate market fears. Keeping an eye on these can help predict short-term movements. Now on to the bullish reversal. On the other hand, if institutional interest picks up and we see more buying pressure, Bitcoin could stabilize around the $60,000 mark. From there, it might even make a push towards $63,150 and potentially $64,578 by the end of the week. This could happen if the market sentiment shifts and we get some positive news. A bullish reversal would require a shift in market sentiment, often triggered by positive news or developments. For instance, new regulatory approvals, major endorsements, or significant technological advancements in the Bitcoin network could drive this shift. Watching the relative strength index can also be useful. An RSI below 30 indicates that the asset is oversold and might be due for a bounce back. If institutional buying increases and RSI trends upwards, a bullish reversal could be on the horizon. Let's now discuss the key factors to watch. 1. The regulatory developments. Any positive regulatory news can boost market sentiment significantly. Regulatory news plays a crucial role in shaping market sentiment. Positive developments, such as favorable laws or endorsements from major economies, can drive investor confidence and push prices up. Conversely, negative regulatory news can have the opposite effect. Keeping up with the latest regulatory news from countries like the USA, China, and the EU is essential for anticipating market movements. Now on to the institutional buying. Watch out for increased buying activity from institutions. This can provide a strong support level for Bitcoin. Institutional buying not only brings liquidity to the market, but also acts as a vote of confidence. When large entities invest in Bitcoin, it often triggers retail investors to follow suit, driving up prices. Tracking the activities of major investment firms and financial reports can provide insights into the level of institutional interest in Bitcoin. Finally, we will now discuss the technical indicators. Keep an eye on changes in RSI and supertrend indicators. These can give us hints about potential market reversals. Technical indicators like the RSI, moving averages, and supertrend indicators are critical tools for predicting market trends. They provide visual cues on whether an asset is overbought, oversold, or trending. Learning how to read and interpret these indicators can help in making informed trading decisions. Regularly updating yourself with the latest charts and analyses will keep you ahead of the curve. So, there you have it. This week is crucial for Bitcoin, with the market currently driven by fear and the potential impact of Mt. Gox repayments looming large. But there's also hope from institutional interest, which might just turn things around. Stay tuned, keep watching those indicators, and make sure you're ready to act on the latest market developments. Again, the key levels to watch. Support levels will be at $58,000 level, and the resistance will be near or between the $63,150 and the $64,578 level. In the ever-volatile world of crypto, staying updated and prepared is your best strategy. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. And as always, happy investing.
There's going to be a lot of views there. Then there's 330 million companies in the world. And you know a few of them. There's Apple. When Apple encounters Bitcoin, and they're one of the more important companies in the world, 1 billion people rely upon them. When Apple encounters Bitcoin, I think they may look at it and think, well, wait a minute, Bitcoin, multi-signature, cloud, what if we actually make the Apple Watch a signing device and combine it with the iPhone and combine it with the third signing device on a laptop, and then we do something with the cloud, and Apple becomes a bank that has hundreds of billions of dollars of assets in it, and we secure that via the Apple Cloud. And I suppose if Apple does that, then Google will take a different view. Well, we don't want Apple to do that. We want that to be done in Android. And at some point, Samsung will say, well, wait a minute, Samsung phones are used for Android, and we can put the secure element in that, and we'll take a different view. And at some point, you're going to have Qualcomm say, well, wait a minute, we provide the chips that are used in these phones, and maybe our chip, maybe it ought to have a Bitcoin miner in it, or maybe our chip ought to have a secure element to store your cryptographic keys so that our chip can be the right signing device. And then you're going to have all the Chinese companies, and the Chinese government will say, well, you know, maybe we don't want Apple and Google to do this, and we want our companies, Huawei, to do this. And so you're going to have governments that'll take a view. You're going to have companies that are going to take a view. You're going to have other companies like Block, and Block is going to say, well, we want to be better than Apple or Google, and so Block will ship the BitKey, and Block will embed Bitcoin support into Cash App, and Block will do that in the United States. But Block doesn't operate in China, and there's going to be a company in China, and they're going to think, well, maybe we'll just copy what Block does, and we'll just do it in China. And that's going to work for them because the Chinese government's probably going to make it very difficult for an American company to do what American companies do in China. So then there's going to be some people that are going to say, well, I don't want to trust a company when you actually buy a cold card or you buy a Trezor or a Ledger, you're trusting a company. So what do you mean by not trust a company, right? Well, I'm not going to trust a company to store my keys. Well, so what are you going to do? I'm gonna buy one of those titanium plates, and I'm going to hammer my keys on the titanium plate. Okay, well, how's that going to get shipped to you? Well, I'm going to FedEx that. You're going to trust that company? I'm going to put it in a bank, safe deposit. That's another company, right? There's going to be a whole set of people. They'll take a view that I don't trust that company, but I'll trust this, or I'll trust myself. And that's going to evolve, right? I actually think, how does Bitcoin scale? You know, what you're going to end up with is a set of entities that self-custody on the base layer, the OGs, Bitcoin maximalists, especially the ones with large amounts of Bitcoin, and they will self-custody. Then you will see a set of Bitcoin banks. Cash App is a Bitcoin bank. Fidelity and Coinbase will be Bitcoin banks. Standard Charter and other custodians, NYDIG and Anchorage, they will be Bitcoin banks. You'll probably see 10,000, 20,000, 50,000 Bitcoin banks, and they will be exchanges, custodians. They'll start to offer other services, maybe trading, maybe yield, maybe credit, or maybe just buy, sell, and custody.